Nice to see some green in the market, 𝗕𝗬𝗕𝗙. What's happening? So we obviously got CPI, or not CPI. We actually got FOMC coming up now. Numbers are coming out in the next few minutes. But it's nice to see the market reaction. Nice to see a very strong altcoin reaction. We've had a nice bounce from Bitcoin. However, altcoins looking fire at the moment. You know, looking at ejective doing 23% over the last 24 hours. We got Phantom waking up, Blockstacks waking up, Render waking up incredibly strong, Uni waking up, Notcoin waking up, Ondo, many great coins. So it's nice to see the altcoins coming to life, and as well as seeing Bitcoin break a nice trend, a decent trend actually. If I show you this over here, we have had the pullbacks. We had a nice little bit of red yesterday that pulled back into the zone over here. And we had a massive squeeze today. Obviously, CPI came incredibly well. Came out better than what expected, and we ended up breaking the trend. So what we're looking at now, guys, is to see how the market's going to basically react going into FOMC, seeing the numbers. If things are flat, I think maybe short-term, a little bit of wick. However, if we go dovish and there's any slight thing of rate cuts happening in July, I think the market's going to rip. So the market's also showing us here, there's another short squeeze on Bitcoin. So it's very important, guys, that this pump, if it's going to be real, we must get through 70K. We get through 70, there's a very strong squeeze for us to get to 72. And again, the more times we get closer to that all-time high, the moment we pop it, I think we're going to fly very quickly. So it has been a very hard couple of days. Has been a little while. You know, we've had a little bit of red. The alts have been bleeding quite a bit. However, look how quickly they wake up. And it's nice to not only see Bitcoin print a good candle today, actually seeing the dominance flat. And the dominance flat, therefore, you know, extending the altcoins, and the altcoins are looking incredibly strong. So it's quite weird to see that Bitcoin's looking pretty good. ETH is looking good. ETH to Bitcoin's not really pumping much, but the altcoins are just waking up incredibly fast. And again, I spoke about so much of this in the week, guys, of the altcoins sitting at major supports. All of them. Look at that nice candle from Chainlink. Look at a Mutable X. Nice candle in that zone over there. Many of these tokens are very big lows. And you can see Dot waking up, really strong candle over there. So guys, what we're going to do, numbers will come out now in, 30 seconds. Let's see how the market reacts. I'm going to see if there's some possible, any entries, if they are a nice little wick to the downside. I do have my account up over here. I entered in this morning. You guys know I entered in this morning. So this is looking pretty good at the moment. So we'll see if there's any trades. And then what we'll do while we wait for Mr. Powell to come and speak, myself and this man over here, and there's another guy also entering. I think you know him pretty well. But here's Dill, the man over here. We're going to chart some altcoins for you guys. Prep ourselves. Let's see what happens. What are we? 5, 4, 3, 2, 1. Are we going to get popcorn? What are we getting? What's up, dude? Okay. Fast wick. Fast wick. This is what I expected. Fast wick. Dominance is dropping pretty hard.
I can't hear anything. Fuck.
But we're going to hear you, bro.
You can see your new beard. I like that too.
Let's see. Okay, dominance printing down. Let's see. Fast wick. Let's see. Craig, will you give me did you see any, what it was? Same or higher? Okay, there's the wick. Let's see. Oh, come on, internet. Okay, let's see.
We got BTC.
Here we go. Do we get smashed from here? Let's see. So they usually wick first, and then we'll see from here. Any news there, Craig?
Unchanged.
Okay, so for me then, fast wick, and we should get a strong reaction. And then it's very important, obviously, with Powell jumping in and seeing what's basically next. Usually when we have unchanged, you do get the immediate wick. I have important zones for us to obviously hold, but these wicks come in very quickly. So what we should see is the wick here. Hopefully a bit of calm down, and we should get a buy up. We shall see if we get a buy up. It was nice to see some green earlier. Dill, it would be nice to see if we continue the green. Very important. Dude, very important. There's the wick. Come on, baby. Come on, markets. Hold. You know when those sailors are there in the ocean, they hold, baby. Let's go. Come on, hold. All we got to do is survive and hold these areas. Market will relax, and we should get a strong recovery. Come on. Let's see. Guys, in the meanwhile, brand new channel, hit the subscribe button, hit the like button, smash the like button. I want to see the like button fly through the roof. I want to see the comments going. Are we bullish? Are we bearish? What are we thinking? Was it nice to see some green? That's why it's always important for any short-term trades. Let's see, am I surviving my short-term trades here? Still looking pretty good at the moment. Okay, there's a nice wick. Come on, are we going to Valhalla? Are we going to Valhalla? Are we going to get rockets? Come
There's
on.
a big
Come
hawkish
on.
Look at this.
Come
There's a
on.
big surprise. Hold on. There's a big hawkish surprise here. Let's see what's going on here. There's a big hawkish surprise. Fed holds benchmark rate 5.25. Fed median forecast shows 22% basis rate cuts. Shows here. This is what I'm looking at here. This is what I'm looking at here. My researchers are sending it to us now. Let me just. There we go. Okay, so median forecast shows 25 basis points rate cut in 2024 versus 75. So that's the dot plot. So dot plot looks, they're saying that there's going to be one rate cut in 2024. I think that's huge, by the way. I think that the fact that we're going to get one rate cut is actually fucking huge. So we should be happy about it. But the market's not loving that. The market's not loving that.
No, but you know how it always is. Fast little wake up. Can you hear us, by the way, Ran?
Let's see.
Can you hear us now?
I can hear you.
Okay, there we go. Now making sure. Now, usually we have this immediate effect. Let's see what happens going into the chats. Obviously, nice surprise today. Market looked pretty good. But let's get through this. You know, if Bitcoin holds these, we broke the trend. If we can hold these trends, hold these levels, we could still look pretty good. Ran vacation man.
Just if you want, it's all coming out. Our researchers are busy here on the newsroom. So everything's coming out right now on the newsroom as we're getting it. This is where we're getting our information from, right here from the newsroom on Banter Bubbles. So you go to Banter Bubbles, you click on newsroom. You can see our researchers are feeding us. This is what scared the markets now. So Fed leaves rates unchanged. This was expected and also was priced in. Interest rate projections by the Fed have remained the same, with today's lower than expected CPI. The September FOMC is now pricing in a 70.9% chance of 1 or 2 rate cuts by that point. This increases to 82.7. So they're pricing in 1 definite rate cut by the end of this year. It was 3, so it's now 1. I think this is very bullish. I think the market's going to realize in a second that this is actually very bullish. So let's go back to the chart. I think by the end of tonight, the market realizes how bullish this thing is. And I think it's going to be very, very, very fucking bullish.
We just got to survive the wicks. That's basically it. We just got to hold some levels.
Yeah, I think
look. You
guys look at the levels. I'm busy gathering all the news here.
Okay, guys, so let's obviously go through a couple of things. So obviously high time frame, you know, we were stuck in a little bit of a tough position earlier because we were at major areas, you know, major zones the last couple of days. We did see a couple of 2 big, you know, red candles that came in pretty hot. And there's 2 basically really big bounce levels for me for Bitcoin. It was the one basically indicating that, you know, a couple more days of red, a couple more days of sadness, market struggling a little bit, therefore, but still expecting a really strong, you know, bounce area around 62. And then there's the super bullish scenario of us holding 66. And it's a very strong level. And it's basically indicating, guys, that we had the previous bounce where we came from this 57K zone. And we had quite a strong rally to the upside. And now it's the retracement. You know, something where you see a big wave go up and we're seeing this. And if we have a short retracement and we hold an important level, it indicates we are very bullish, you know, for another strong leg to the upside. If we decide to go to the next bullish zone over here, it does just indicate a little bit more struggle time, a little bit more quiet time within the market. So right now, obviously looking at the early signs today, it's important we hold a couple of trends and obviously hold the important levels that we made up today. So I would like to see us, you know, hold this 68, not break too much into these zones. Again, they might wick in here and trick the market slightly if that does come into play. But as it stands at the moment, we're still looking pretty good. And then what I'm looking for is obviously the pop. It's very important. You know, even what Ran's saying that the market must wake up in this point is getting through 70K. Through 70K, I don't think this wall at 72, 73 is going to last forever. And I think another test there can finally give us a really good chance of popping through and hopefully getting back into the all-time high discovery sort of point. So guys, in the chat, can we rock a poll there, Matt? Let's see what everyone says. Are we going to 62 or are we breaking all-time highs? I want to see what everyone's doing. Ran, how's your holiday, bro? He's a little bit stuck.
He's frozen.
Let's just show you Rad's face here. Let's just wait, where is he? Ah, he's gone. Oh, he exited. Okay, guys. So We got a couple of minutes. So in the meanwhile, pop some of your altcoin charts. Let's go through them. Let's go look at a couple of the big movers for the day. In the meanwhile, will the team just keep an eye on that 69K level for me? If there's any drop while I'm going through some coins, let me know. I just want to see what's happening. So Solana, nice bounce on Sol, also breaking a little short-term trend. Let this just load up here for a second. So nice. Obviously, Sol, we do want to see, the break of the 160. That will open up. But Sol looked pretty good. But I want to look at a couple of other ones. So Render had a really strong bounce. I was looking at the levels of Render, and it was actually crazy where it's at. Render was at a very, very, very important support line. So it's obviously had a really good, strong year in general. And if you have a look at the major support, it was important that it actually bounced here. It gave us an indication that this thing wasn't going to come down, maybe another 30-40%. So you could see a lot of these alts are sitting on super high time frame, extended, RSI sitting at the bottom and on very important supports, basically indicating that the bulls must step in pretty quickly. Otherwise, we're going to stick to the history, right? Now, what is the history? The history says that it's actually very choppy. June, July, August, September, October, we start waking up November, December. That's sort of where a lot of people's minds are at. We obviously got elections coming through, so we're obviously looking at probably a very hot end of the year. However, we did have a little shift this year. Let's bring you back here, Dol. I don't know why. Sorry, bro. However, we did have a little shift this year where for the first time ever, Bitcoin broke all-time high before halving. Usually we always had that after. So we had a slight little difference happening this year. And the question is there another curveball coming maybe this year where we actually send the market possibly earlier than the end of the year? So I think these trends are important for us to hold and important for us to see some bullish momentum to the upside, especially now to indicate that, hey, we could rocket from this month, we could rocket from next month, and we could go back into all-time highs, not only with Bitcoin, but obviously look at ETH joining the party too as well. So it's important for us mindset-wise to prep ourselves currently in the bull market. Where are we in the phase? Are we going into the euphoria phase? Are we going into the optimism phase? Or are we going to sit here for a while? That was the big question. Or any maybe other pool. Are we going to go big banana? If so, we do need to hold these levels and the market must start waking up and start breaking these crazy zones. So when it comes to these high time frames, it's important that we do start to see nice momentum to the upside. Then what we got is a couple other big movers. I actually want to get, where is our good old injective? Dol, what do you think of the injective pump? Nice pump.
200-day MA got breached now, so we're in our next potential range coming up here. There's a 45%.
Yeah, so there's there we go. So what it also did earlier is it broke out of the range high. So it smashed through here. Let's just quickly show you guys here. So there's the nice little range high, previous level that Injective wasn't able to get through for a while. 65% are saying all-time high. So we've got a couple of bulls here in the house. Yeah, I'm a bull too. I think Dylan's a bull too. We bulls, baby. Oh, there we go. So again, nice, Ray. So again, guys, obviously looking at this resistance over here, this is good signs. So again, market reacts strong here, continues to react strong here. I think Injective is going to be a very strong runner. And my next, squeeze points, I've just got higher targets, for the higher time frames, but the next squeeze point should see us push to that 40 pretty quickly. So I'll definitely be going through a couple. Obviously, Chainlink was back to the 16s, bounced at a really good zone, still waiting for a trend break there. So if this thing decides to get a trend break in the next, day or two, we'll start to see a bit of our previous altcoin leader wake up. Let's quickly have a look at Bitcoin. Okay, it's holding the trend. It's really, Rad said his internet's not working, Showman. We missed the guy. He must stop going. If he's going to go on holiday, he knows this, bro. Best Wi-Fi, have your camera, have your lights. This is not our first rodeo, bro. We've been doing this for how long now?
I traveled with my entire kit. I traveled with 2 monitors as well, bro. It's like I brought it.
Exactly. Yeah, we come with our whole bags. We those guys in the airport that on the trolley with bags and bags and bags. Okay, so far we're holding okay. Let's look at how ETH's holding. Okay, let's look at dominance. Not too much of a spike. We've obviously had a very strong dominance the last while. We have had a strong dominance, so I don't want to see this thing spike too much to the upside. Right now, it's a little bit, so you'll see a little bit of heat on the alts, but nothing too big at the moment. And let's see any of the other big moves. I know Uni also woke up pretty strong. Uni woke up pretty strong as well. So we had a nice little Uni push. So that's obviously the run for the day. Finally, I'm so glad. I don't know about you, Dil, but I was looking at some of these alts and I was like, we got to hold these levels, bro. Like, if we want any kind of bull market this year still, it's important
it had to happen.
Important that
very difficult 2 days for everyone watching it bleed into these levels. You know, we just the signs were there that we were going to get a bounce, and we just had to have that faith. But wow, it was a tough ride.
It was, bro, and it's actually crazy in the daily. It wasn't too insane. However, like, we were starting to form some fat red candles, and when you start to form fat ones one after the other, you know, it starts to get a little bit stressful out there. Where today, you know, we're actually forming a really good green one. So if we can close above yesterday, today, that's really good. So again, a 70K I think is super important, you know, for us to get through. And it's quite crazy. This market looks a little bit like shocked, not shocked, but a little bit confused. And I think, like Rand's saying, maybe they start to digest it. And my main thing here is, if we don't dump here, if we don't dump in the chat when Powell's speaking, and we don't dump in these things, I think the market will settle, and I do think we're going to rock it. You know, the main thing that I'm looking for here is not a strong ass rejection, something that takes us straight back to the lows that we had this morning. If we hold any of these major levels, and we hold it throughout the whole chat, and everything's in, I do think that we'll settle for a while, and I think we got enough strength. I think there's a lot of FOMO in the market today. What's your thoughts, though? Do you want to show up something over there, or maybe one of your charts there?
Yeah, look, a couple of pullback zones that I was watching. I was marking them earlier for the guys on my show earlier, about an hour and a half ago, and these are the areas we were looking at. So let me just pull up couple of charts here. So this was BTC. There were a couple of zones of interest to me. First one was this 236 fib, which we've pinged you. So that's an interesting level. And then low, I mean, there's no panic zones here. Anything down to 68.5, 68.4, no panic zone here for me. You know, that's still a bullish zone. And then you want to tie that up, you know, into the corresponding altcoins. You want to tie these altcoins into zones where they could potentially bounce on a pullback. And you can see I'm using CAS as an example, but we were looking at this at length today, and we were saying, where can we go on bullish pullbacks here on some of these alts? And we were highlighting that, you know, we're potentially going to get a reversal into the FOMC, which we've now got. And now these are the bullish zones for us to look for potential bounces. So CAS for me, I've just added to my CAS position here at level 0.17. We pinged that 382, and then another level lower down. If we do get a little bit more of a bleed out now, and let's say BTC pings that 382 fib, we're going to be seeing a lot of these altcoins hitting their 618s. So CAS for me, 0.165 is the next area. So I've added to CAS here on the 382. Let's see what happens at the 618 if we do get it. And same goes for 𝗟𝗡𝗡 that we've been trading. And we've just pinged our 382 on that first BTC bounce. So this was the first zone for me, the add zone here on 𝗟𝗡𝗡. So this 34.6, bang, just pinged it now. And then we've got our backup zone. This is a high conviction zone here, 33.5. Okay, high conviction zone there for 𝗟𝗡𝗡. And, you know, it seems to be playing out. So we're getting our pullbacks exactly like we were looking for. And
I think the main thing we're just looking now is to hold support. We hold support throughout all of this. We're just looking at what can go wrong now. We've had a brilliant start to the day. Fat candles everywhere, bouncing on supports everywhere. Is the party about to end? I think that was the main thing that we're waiting for. And to see the right now market's sort of still holding. Dominance coming down a little bit now, actually. So the alts are actually recovering pretty. Ooh, how is that dot coming with a nice little fast wick over there? Short time frame, waking up. Look at these candles. We're starting to get some. We're starting to get a little bit of action here. Let's see. Not bad. I actually thought the wick would be a little bit worse. Let's see. I don't want to talk too early, but nonetheless, the wick's not looking too bad. Not looking too bad at all. And the importance of this as well, guys, is the squeeze. We're looking at another squeeze. Okay, not only are we looking at a Bitcoin squeeze, we're looking at a lot of alts are sitting at the squeeze levels. And if you like today, you know, if you like looking at this current banter bubbles, by the way, get banter bubbles, guys. Open up banter bubbles. Make sure you got it. Best thing you could use. But I'm looking at, hopefully, if we get the next squeeze, a double-digit day where you look at this and everything's in the double digits, right? Something where we're actually getting our whole market bounce, which is really good. And I just want to show you that, let's speak a little bit dirty here, right? Not dirty, but let's speak that the market does get, you know, extremely bullish. You know, where can we look at, you know, by tomorrow or anything like that? Like, we have a big resistance on ETH at 3.6, and the squeeze takes us back to 3.8, right? And what I'm saying is this could happen pretty quickly, in that sense. And that looks pretty nice there, but you start to look at things like Link, this is getting Link back to 17, 18. So you'll get another 10, 15% on what has happened today. And that will obviously look brilliant when it comes to the weekly time frames, the daily time frames. It'll be super bullish for the high time frame sort of view when it comes to a couple of these squeezes. So you can see everything is basically sitting at DOT is looking hot. I don't know what's up with DOT, but it's looking good. But a lot of these, there's 𝗏𝗘 sitting right at resistance. The squeeze takes us back up to these major zones. So there's a Phantom. There's the 70-cent mark. We get through here, we're back to 80. We get back to the levels. The main thing is we just want to get rid of all the damage that was done over the last couple of days because the charts were looking fantastic last week. And if we can just get back to looking fantastic again, I think we're a step closer to not only Bitcoin all-time high break, but also, altcoins joining the party correctly. The Doge is looking decent, little push up here. Looks like the market is waiting for Powell to speak, though.
Yeah. Anything's looking good right now. Anything. Even XRP probably has a candle, believe it or not.
Are we doing that now, bro? Are we doing that now? Is it that kind of show?
Let's get
let's get the dust here. Blow some dust off these bad boys. No, come on. This thing still looks a bit sad, eh? I know they got a very strong army, but it's like, okay, it's at support. Like if you like XRP to accumulate for the long time frame, but this thing is I can't either. I want to catch that pump one day, but it even lost that weekly trend. So yeah, XRP's got a lot of work to do. Not looking the super best at the moment, but Notcoin decent. Right. We're actually getting a little bit of a Notcoin possible breakout. So there was the initial rampage of coming out, formed a beautiful bull flag, and some signs of maybe a very strong trend break to the upside. So that one's looking pretty decent. Let's look at the bubbles here and see if there's anything else that's looking hot.
Did you call a Notcoin trade today?
I did.
Okay, no. Just a good banger there. I saw some of the guys were saying you called Notcoin. That seems to be moving well today.
No, we did good. We entered yesterday, got a bit of stops, and then had the nuts to do it today again and say, you know what? Yeah. I'm sorry, but if I go into the high time frames here, we have the indicators, right? We got the indicators. So the market needed a cool down, but I want to show you something here. The RSI, see, I'm seeing a nice inverse head and shoulders here. I'm actually seeing a very bullish pattern here, especially if we hold the 66, to finally get us through the highs. But, on a lot of these tokens, if you looked at them, let's go through a couple of them, a lot of their daily RSIs are at the bottom. Down support, daily RSIs are at the bottom. We still know the weeklies are at the bottom too. They're still hovering at the bottom ranges. They're just coming out of the oversold zones. So there's a lot of signs, and I even saw it with Ethereum. This is why I do think there will be an Ethereum awakening at some point. Massive bullish divergence on Ethereum. So Ethereum's daily is at the bottom, but I also want to show you guys the normal relative strength index over here. You could see that. Let it just load up. There we go. Here we go. 12-hour chart. You can see here massive lower lows here and massive higher highs on the chart. So, bit of signs that today was a very important zone. But the biggest one for me, the biggest one was this one. Let's go here. Why altcoins needed to bounce and why they're probably looking so juicy today is this chart. So let's go here. There's the chart. Okay, so the most important chart for me. Basically still giving us an indication that, hey, like we're not going to wait another 6 months, for a real pump from alts. And I actually tweeted this earlier. Do me a favor, guys. If you're watching here, go and follow myself on Twitter, Sheldon_Sniper. Here's my Twitter account over here. Go follow, and then follow the Lord of Entry. The Lord of Entry. Go follow us on Twitter over there. Share lots of love. You can see her there. Say hi there, though. We can see us over there, bro. We're over there, but going back over here, because I tweeted this earlier, this is the main momentum line that alts have held the entire year. Okay, going all the way from November. The main momentum, to show that this is the bullish momentum, the strength that we've been seeing, all these things. So we were right on that line yesterday, like exactly on that line yesterday. We literally touched it to the cent, right, in that area. So it was important we bounced. And again, RSI was flatlined there. But what's also exciting is obviously flatline on the higher time frame. So what does that mean? That means everything that I've been focusing to buy over the last week or two, I'm actually looking for buys for the next 3 to 6 months. I'm actually looking at the point of getting things at such good levels that we can get an offlift from the markets, give you that room space of being in some profits of 30, 40, 50, 100%, so that any further wicks in the future does not affect you. That's the whole goal here. The goal is to get such good entries, because anyone that bought Solana at 20, 30, 40 bucks, what does it matter right now? You know, any of these wicks to 120, 100 does it. So you want to get to the point of actually making money quite easily. And that just takes the hard work of fishing when no one's fishing in the markets, and when it's that really depressed moment, and buying when no one's buying. And when you're doing that, when the reward finally comes your way, it gives you leeway that later on, like for example now, let's say Solana does go to $240, $280. If that thing dumps from 280 back to 200 or 180, what is your entries now? It doesn't affect you, you know, and that's the big thing. We know that as the markets expand to the upside, the wicks come too, and that's where they try to trap you. So it was important that we did get that strong bounce. Let's have a look. Are we getting anything? Market's just sitting flat. So I don't know if you want to show someone in the meanwhile there, Dole. Let me get the FOMC ready here.
Yeah.
In the meanwhile, Craig, will you get me the link there quickly, please? Craig, if you're listening, just get it through there to me. Let's get the link up in the meanwhile, so we can start preparing for Powell. And then how is your fundamentals with this stuff, though? Do you understand when they say half the stuff? I don't. I look at the charts. Like I just know, this day's big, this day's big, and I know the thing.
If Uncle Ran says the minutes sound bullish, the market's going to find out. I think we know the answer. I think we're looking for bullish vibes here. Let's see what he has to say. Let's try and pick up a few things here from him. But
so guys, do me a favor in the comments. Dole's going to charge you some coins. So pop in the comments there. Let's see. Myself and Dole will charge you some coins. What do you want us to chart in the meanwhile while we wait 7 minutes to see our destiny? Do we get jobs? Or are we eating sushi tonight? That's the question. That's the question.
Leon wants some
links in your WhatsApp there, Sheldon, for the FOMC.
Thank you, sir. Thank you. I'm going to sort this out so long quickly.
Okay, Leon, you want some Rune? So just to go back, revisit, we were pulling Rune off the 618. So that was a nice little bounce. If you did jump into that one yesterday, we had our 618 bounce on the horizontals. We had heavily oversold RSIs. There were multiple reasons why we were going to get a bounce here on Rune. And then what we did today was a little exercise. We just zoomed in on all of these tokens that had bounced, and we said, okay, we're looking for bullish bounce zones now. Where are we going to get potential pullbacks? Where can we get new entries, or where can we add to our existing positions? And Rune was one of them that we were playing with today. So we are watching this big zone here, 5.17 to about 5.2. You can push into this region, 5.17 to 5.12. 5.2, that's an area of interest for me. So just a little push into that zone we're looking at. And then if there are some hawkish comments coming out here and things do turn a little bit bearish, your next bounce zone, Leon, has got to be at about 5. Call it 5.03. That's got to be your next area that you're going to be watching. So same principle applies. I see remote cryptoverse wants some AVAX, and same principle for AVAX. Let's just dial into this. We're going to just look at it on the 1 hour. So we had that bounce yesterday. Things were looking good. And now what are we tracking? We're just tracking a potential wick zone. And we want to see where this thing could potentially go to. So you just grab your fibs, you move it from the low to the high, and you start looking at your bullish fib zones. And the first one of interest here for AVAX, now this thing's absolutely ripped now. But the first area of interest that you want to be watching, your big support zone, 32.7. If you want to get super bullish, and this is for the proper degens out there, you can pull out a 236 fib. Okay, these are when the market is incredibly bullish. You can pay attention to this one, and you can see AVAX had a little pullback, and they pinged the 236 fib here. So support you want to watch now, 33.2. Watch 33.2, support number 1. Number 2, watch 32.8. That's a nice area there, 32.8. And then your last gasp zone here, if the bulls are still going to be alive, you're looking at around about 32. That is going to be your next potential zone there. And Najibullah shouting Sui. Let's take a look at Sui quickly as well. Yes, Phantom. Anyone interested in Phantom? I've got the Phantom chart out here, and same principle. We're just looking for these little wick pullback zones, and Phantom 66 is support for you, 0.66. So watch that area. If you start losing that, then you're potentially looking at 0.645. So all is well with Phantom as well. You can see a nice push up on some of these candles. So things are looking relatively decent here. Okay, Sui, let's see what we got. Let's just back out to the 12 hour. Let's take a look here. And what did we do? Oh, they they bled us out here a little bit. We lost that 618. So you can see here, we've pulled a fib from the lows to the highs, and we just wanted to look for a potential bounce zone here on SUI. And they sweated you out of that 618. So there were probably a lot of stop outs here on SUI, but I've seen a big narrative around this one and lots of bullish talk around SUI. So I think it could be a nice banger trade if you can get an entry. What you want to do here, same principle again. We're looking for bullish pullback zones. So we're just going to take our fibs from the lows to the highs. And we want to just identify areas where we get fibs tying in with decent horizontals as well. So SUI, here's an area for you of interest. 1.02. That's got to be the zone you really want to watch. That's your main area that you want to pay attention to. So it's a simple bullish pullback, and 1.02 is what you're looking at. And then I've got a big area here, 99, 0.99 to 1. Anywhere in that region has got to be a potential entry zone there for you as well. So for me, I like a move into that zone for a potential entry there, bang. And alternatively, 0.99 is what you're going to watch. And the principle is exactly the same as what we've seen here on CAS, for example, that I showed you earlier. We pulled a fib from a low to a high. We're looking for a reaction on one of these reaction fibs. There's a 382 ping. We've smashed that area there. And we had that also on Arweave as well earlier. You can see we just pinged this 382 as well. So that is kind of what we're looking for there. Looking for moves on all your alts that you are looking at. You can just pull your fibs from those lows to the highs there and look for that 382 pullback on these altcoins. I see we've got Beam as well from Chester.
Okay, Dove, can we, just before we do that, let's I just want to see here. Entire screen. So I just want to make sure we can hear. So let me just share here quickly. Can you hear the music? No.
No. You got to share window.
Okay. Let's do that quick. Present. Share screen. Okay, let's have a look. Now?
Have you pushed play?
Yeah. Otherwise, if you can do it there, Dill, that'll be great.
Okay, let me figure this one out quickly. Maybe pull up Beam in the meantime while I'm looking.
Okay, I just want to get the... Okay, guys, let's get ready. It's about to happen.
Yeah, they're going.
Sheldon Rand's apparently saying use Firefox. So open it up.
Okay. Let's do that.
Yeah, I've got it here. Should be working. Tell me if you can hear this.
Yes. Can you make it a bit smaller and pop the Bitcoin price there?
Oh, no, that's advanced grade, bro. That's advanced grade. Let's see if we can try and figure this
We'll
out.
We'll just shift in between. From there, pop to the chart. I'll let you know if anything interesting is happening.
Okay.
Okay, dude. Bread or lobster?
The volume okay.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation.
Okay, add it back. There we go.
But is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Bitcoin's still holding 69 for now.
By our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving.
Guys, remember the main thing we want here is the market to hold.
So far,
that's the main thing. By the time
they
he's
have
done
not given us
talking,
that greater
on
confidence.
Bitcoin to be holding,
Most
and if we
recent
do that, I
inflation
think we'll
readings
calm
have been
down
more
and
favorable in earlier in the
explode.
year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, The committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SCP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
69K still holding here nicely.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December, really. And we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis.
We'll bring it back in a sec. In the meanwhile, Bitcoin still holding, looking pretty decent. Dominance setting flat. 𝗟𝗚𝗙𝗢 still holding pretty good at the moment. So market's not reacting too much at the moment. Let's jump back in.
12 months rates by the end of the year. If we get better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Timmerows of the Wall Street Journal.
These things are boring, guys, but it's important to
I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings like the one that we saw this morning make a September interest rate cut possible?
Come on.
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I don't really, I can't really distinguish between two of these.
Jamie.
They're so close for me. These are very close calls, but we ask them to write down the most likely one, so they do. And as I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it that is on the committee a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly more good inflation readings will help with that. I'm not going to be specific about how many, because really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response, which is another thing that could happen. But again, we don't see that. And we see today's
Answer the question,
report
bro.
as,
September.
as progress and as building confidence.
Yeah, he's kind of
We
dancing
see
around a
ourselves
little bit
as
here.
having the
Always does
confidence
this.
that would warrant beginning to loosen policy at this time.
And if I could
Break of
quickly follow
70K,
up,
you can
did-
quit your
did
job,
you or any
correct.
of your colleagues change
Until then,
your
hold your job, bro.
interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that.
Stop giving us anything yet.
Some people do, some people don't. Most people
Dude, I just don't want dump, bro. I don't care. I can
Yeah.
snooze off here as long as we hold and we're okay.
What's in the SEP?
Once this
actually
is
does
done, I think
reflect
we're gonna
the
rock
data
it
that
once
we
the
got
market
today, to the
settles.
extent you can, reflect it in one day. I think
Look, Ran was quite happy with
we'll see
with
PPI
the sound of
tomorrow. We'll
things
know
today.
more about.
Sad is not here. Sad is not
as
here.
the month goes on, but the initial CPI reading and its kind of first level translation to PCE we did have this morning. We were briefed about it.
Run
and
at
people were
internet
able to
issues.
consider whether they should make
Okay.
changes. And as I said,
Ran the
some
man
people
in the bull
generally do,
market
but
on
most people
holiday
generally don't.
does not have internet.
Hi, 𝗕𝗢𝗕𝗙𝗢𝗕𝗚 from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor
Yeah, it
market
does sound
was
uncertain.
kind of overheated 2 years ago. And we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable
One thing I do
levels.
notice, the moment we
We
get
have seen
any redness on
unemployment creep
Bitcoin, the
up,
dominance is
now
coming down. So
6/10
the
over
alts
the
are
course
pretty
of a
strong.
year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit. And that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still, they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully. And that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand. And that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago or even 1 year ago.
So they want the labor market weaker, but it's not weak enough to
Thanks,
make
Chair
them
Powell.
drool.
Neil Irwin with Axios.
Yet.
Back on the rates path, the SEP showed
We're getting a little pullback from Bitcoin. Okay, this is shorter time frames, guys. We do want to hold these big levels. I'd say mid 68.5. Let's see where we go here now. Dominance pulling back a bit. Let's see a couple of alts. And this is 5-minute charts. So just before we jump back to the snooze first, let's just have a look. Not too much just yet. But obviously, Bitcoin side, we do want to see some strength coming in pretty soon. Let's have a look.
Really good.
Guys, we'll jump on and we'll go through a couple of charts and stuff. For me, mainly, it's charts.
And what we took away from that was
I just want to make sure we hold good supports
to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year, take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. We're at the economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina.
Oh, Gina! Come on, Gina.
Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So 2 things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed. And what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today, we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which were very low by recent history measures. Now we can't really know that. That's an interesting dispute and discussion to have now. But ultimately, we think that things like the neutral rate are driven by longer run, slow moving forces. And there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
Well, thanks, Chair Powell. Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion that the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal. And then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking. And that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic related distortions to both supply and demand. And that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had
quick update, you guys. So Bitcoin's still just sitting around this trend over here. I think the big thing we don't want to see here is obviously the absorb of that massive candle earlier. So any massive higher low here throughout this next hour is still pretty bullish. And we'll speak about the charts in a sec. But I did hear that the Dixie was spiking quite a bit. Let's actually have a look there. Bit of a spike in the Dixie. However, I want to show you something on the Dixie. It is quite bearish. This thing lost quite a big trend a few weeks back. So this might be a little retest up for another push down. So we'll have a look. It dropped back under trend. So we'll keep an eye over there. And yeah, not too much. I just don't want to lose all that greenness from earlier, bro.
The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market, and your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that, you know, since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but, you know, no one has that as their base case. So no one on the committee does. But so that's, you know, that's how we think about it, and that's what we've been getting. That's what we've been getting, is good progress on inflation with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and you know that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation. So I mean, we're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability banks in leaving rates where they are for too long at this point?
On housing, you know, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, you know, low mortgages. In terms of banks, the banking system has been, you know, solid, strong, well-capitalized lending. You know, we've seen good performance by the banks. We had the turmoil early last year, but you know, banks have been focusing on bringing up their liquidity, bringing up their capital, and having a risk management plans in place. So the banking system, you know, seems to be.
Dr. Feelgood says no bull run this year. Bruh, we all come here with vibes. We come here happy, and you drop that bomb on us. No. I don't know.
Thanks.
We're holding levels. That's it.
I was wondering if we can. Inflation, if you can tell us a little more about where you see inflationary pressure in the economy.
I think the market
you
was
mentioned
anticipating
labor markets
a
coming
lot
into
more
better
dovish
balance.
talk. Yeah, I think
Inflation
people wanted to jump
expectations
on
appear to be well
this
anchored.
bandwagon, yeah, and I think
You're
he's just
seeing,
bringing
you know,
everyone
anecdotal
back to
stories
earth,
of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, you know, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, you know, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand.
Chainlink looks very bullish.
We've taken some signal from that, but you know, and of course, housing services, your readings there to some extent that's you know, catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, you know, I would say above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal, you know, cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel.
Come on, Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy? What you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years, and try to pull out the significance to the U.S. economy in 125 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters. And I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will.
Powell does look like a guy that owns XRP, yeah?
I have no way of
He
saying
does.
we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully. And we will approach it carefully while we're very much keeping an eye on, downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer, have the confidence that's needed for rate cuts. Something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight. Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We
I see the signal's struggling a little bit there.
Tendency to dismiss the parts of inflation that we don't like and just make it go away. So, but we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, we tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that we think it's going to take longer to get confidence that inflation is moving sustainably on.
The market's going to bounce. We should bounce
I think that
in
was
these
the right thing
zones.
to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward.
This is where we need to go. Everything's on short-term 618s.
Moving sustainably down to 2%. And readings like today's, that's a step in the right direction. But one reading isn't. It's just. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
Okay, so good news here is we have officially still closed above trend, which is pretty good. And I'm just looking at I like to just zoom in. The short term that doesn't mean much, but however, good level bounce, seeing this go up, and then obviously just looking here at the dominance and seeing, the moment we are seeing strength within the markets, you do see how that dominance is coming down. So altcoins are definitely. I was looking at Chainlink now. You can see how quickly they're looking ready to pop. So. Not too bad just yet.
4%, very long time. We had a period of
foolish. Come on.
Inflation has come
See, Ben
down
says,
really significantly.
what is wrong with
and we're
holding
doing
XRP?
Everything
The
we
question
can
is, what is right?
What
is right with
to
holding
bring
XRP?
that inflationary episode.
There's nothing wrong with being rich in 2045.
We're confident that we'll get
there's nothing wrong.
And in the meantime,
we're not haters, yeah.
But the ultimate pain would be a period
just
of
joking.
a long period of high inflation. It is people who lower income people who are at the margins of the economy who
people love your beard, Dole.
Have the worst experience, who
It's
experience
wonderful,
the
isn't
most
it?
pain from inflation. So, it's for those people, for
I
all
wonder if
Americans,
Dots is
particularly
breaking
for those
out
people
from the
that we're
dot
doing
plot.
everything we can to bring inflation back
See,
down.
Dots
under
been
Dot plots.
It's just a quick follow-up here.
Imagine.
You've indicated one in
Going long
time
with
this
dot
year,
plot.
and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing
Look, I
money
think the
remains
message is
very
clear.
expensive.
Yeah, I mean, there wasn't
For
some
everybody who's out
super
there
exciting
waiting
news
on a
out of
rate
this.
cut,
There were no major
about
surprises.
when
Yeah, I
can
think you try to
consumers
calm everyone
expect
down.
some relief?
And the key is now to watch some of these levels. And it's
I
the
don't have a
A5
precise
Yeah,
date
well,
for
I
you,
think we'll
but
give it
what we
another
said
2
is
minutes
that
and then we
wanna
jump
make
onto the
sure
charts.
that
Let's
we're
get into the
confident that
TA.
inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can.
Someone asked if you have hair, Dole.
It's just not a concern in the everyday economic decisions that they make. We were there for a long time. And our goal is to
Right.
get back to that place, and we've made good progress. And we're in the phase now of just.
However, we made a deal. Bitcoin 100K, we get you a comb over, bro.
Pleasure.
Let's give him some
Financial
break.
Times. Just drawing on the
Yeah,
change
some
in the
braids.
statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their house, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply, as they did at the beginning when the economy reopened, they really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the
oil your beard there, though.
Regularly looked at. It is not something that we're the only country that does. It's not something we're looking at changing or would look at changing.
Remember that guy?
Anytime soon. But it's true. It's
Smash
one of
the
the
beers,
very
bro.
hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And
Well, you put a
some
poll up
countries
there.
you just ignore
Must
it,
we
but
scrap this and go
that's
to the
not
charts?
that's
Put a
not how
poll
we
there
do
quickly.
inflation here.
You guys want to
I think
listen
we
to
need
the
to
end?
The way
We'll
we do
scrap
it,
this
we
and go
can
to
be
the
very
charts.
transparent about it. And
Tell me.
it's true that
Tell me.
we're seeing delays in realizing what's happening economically, but we understand that. We
Let's hit
understand
the
that
charts.
very well.
Let's go.
Let's go charts, bro.
Edward Lawrence with Fox Business. Thank you for taking the
News
question.
based,
Chair
yeah.
Powell. So I want to go back to jobs.
There's nothing
and the
too
consumer.
exciting
The
happening
last
yet.
jobs
I think
report
he
showed that
basically
over the
calmed
past
everyone
year,
down.
600
People
homes,
things
34,000
some
more
big
people
stuff.
took
Let's go.
multiple jobs.
Bye. Get rid of that stuff. Just delete that browser. Just erase it from your history there, though. Completely. Until next month. So guys, we end of the day, we come here FOMC and we're gonna stream it every time live. It has become a big player. So I showed this earlier today on the show that FOMC the day tends to be especially the last 4 times, it's tends to be like a basic bottom on Bitcoin. So if you have a look over here, these are the dates that we had, in the time, and it has tend to be, we've dumped into FOMC. We've actually tend to have a really nice reaction from the market. You can see specifically the last 2 times that we've dipped off, we've actually had a strong point. But every time, it's actually been a local bottom, and we've seen the same sort of signals too. Seeing RSIs at the bottom at that point. So nonetheless, we had CPI come out earlier, looked pretty good, got a nice fat candle. The big thing that I want to see is we just don't absorb all the work we did today. If we close anywhere where this red one, is smaller here, I do think we are still bullish. I think the market may be a little bit confused now for maybe an hour, 2 or 3, and I think we'll start pushing stronger to the upside. So we will bring that to you. Let's jump into a couple of things. So obviously we are now holding this trend. It's important. Now, let's speak about a little bit more of a pullback. If there is a bit more of a pullback, my main zones that I really want to hold 68K. I don't really want to lose 68K today. Otherwise, it still gives us that little bit of fear that maybe 62 is there. Now, I know a lot of people are saying, oh, cut this crap, let's buy the dips, these sort of things. It is important. It's important to know that the market might dip for the next 3 months, or it's done dipping this week and we're going to go. It's important because you're either going to keep some cash or, have sort of some sort of understanding. So for me, it's important that we do get going and we do get above the 70K. And anywhere holding 68, I do think we are bullish. Plus, we also at the verge of the dominance looking pretty weak. So we are seeing a very strong awakening within alts. So what I'm trying to say here is if we get to a point in the next few hours that we hold these major levels, I think the market's going to push up again. The squeeze happens above 70K. Once we're above 70K, I think we squeeze pretty quickly. In that same time, I do think we have an ETH BTC push to the upside, and I do think we continue the rally. We're starting to get a little bit of an idea of who's the strong tokens right now. And these are tokens that are actually breaking out to the Bitcoin pairings as well. So your injectives are looking strong. Chainlink's waking up pretty strong. And the moment you get these tokens break through these range, you'll start to get the quick acceleration to the upside. So let's have a look at a few. I want to update you guys on my trades here. I'm still in a Solana and a Rune trade at the moment. Still looking pretty good. And I have the stops you could see basically at the levels of where we broke out today. Okay, for those who are looking for some possible trades, I do think the pullback entries that we're getting to now are pretty good. Here at this area of retest of injective, I think it's looking bullish. I think it looks pretty good for a nice little dipping of the toes. Looking at Link, I would wait slightly, a little bit patient. There's a nice trend there, but the break of these highs, looks pretty good. A lot of these tokens are sitting at nice little trend breaks. I see dots moving. Like you said, the dot plot is definitely... do you want to... Someone said CAS. So CAS broke out earlier, and this is the bounce zone of where you want to see the bounce on CAS, basically. It's basically this area of this, the 16.5 all the way to 17 cents. That's sort of your bounce areas. While we're on this for a second, guys, I just want to remind you, so we've got a few things here. So we got a couple of exchanges and a couple deals here, and I want to give a few shout outs to sponsors quickly. Obviously, Bybit. I'm trading Bybit all the time. You want a Bybit account, go below and open up. Guys, the big one is Sniper School. And I want to play this quick video for you guys because I'm launching Sniper School next week, and I don't think you have much more time to not educate yourself. So I'm going to show this. It's probably not going to hear it, right? Can you hear it? No. You're probably not going to hear it. Okay. If you can, you can find it on the Crypto School. If you can, nonetheless, guys, I have the best and most simplest TA school out there. So go there and click on Sniper School and join. My cohort starts next week. We already have 7,000 students that's already applied for this one. Go in and it is free for you guys. Then what I also want to show you guys is it's so important when you're trading to start learning decentralized trading, guys. So we got this platform here called Evo. And this is where you don't have a username and password. You connect your wallet, guys. And you can trade leverage, you can trade spot, and there's a whole bunch of tokens here. You can even trade pre-market tokens, but nonetheless, Evo is incredible, guys. So you need to start learning decentralized finance. The more centralized exchanges you're in, we know what's happening there. They're getting shut down jurisdiction by jurisdiction all the time. So Evo is a great exchange that we are partnered with, and they're amazing. So go, if you look here in the description, you will find all the links. Got the Sniper Club link, Sniper Club as well, our premium group. We have our own group, guys, and we actually did the live trading sessions earlier. We caught this massive pump. So if you're looking for community, you lost out there. School is your number one, and Sniper Club is exactly where you go after school. This is where you have your mentors. You got Dylan in the charts every day. You got me in the charts every day. We do the signals. We even do memes now. We got everything that's happening within Discord, and I'll actually show you guys quickly. Let's actually bring it up here.
Yeah, I think pull this up while you're pulling that up. We've recently launched a meme channel. We found we were missing something special for the community here in the Sniper Club, and we've pulled in a massive name on Twitter who's now running in our meme channel for you guys, dropping alpha, dropping memes calls all day long in there for you guys. On top of everything else we do, you can see this list here. So
look here on the left, guys. You obviously got all of the recordings. We do recordings every day. You got you got psychology, you got me and Dill live trading, you got many things that are happening. The psychology section is also incredible. Then you got the leverage signals, spot signals, investment signals, margin signals, indicator signals over here. Then you got my charts, Dylan's charts. You could see here earlier, I posted my trades when they were still in the red to say, guys, I'm going long today. I'm going long. Let's try. Let's see how it goes. And those are the exact same trades that I've shown you guys a little bit earlier. You also got Mama Sniper in the house. You got DJ and David. You got Bruce. Many cool people here with all of their charts, the ask sections, and then you got the meme sections. the meme challenges, the DGen, the dungeon. That's all over there. It's incredible. It's incredible. We have one of the best products out there. So if you're someone that needs a community, you're stuck, you're lost, guys, you are going to love this. I promise you. This is a lot of people that, firstly, the team's incredible. Secondly, the community is incredible too. So you can find that there. And you'll find an Evo link. I just want to see if we do see it here below. Is the Evo link in?
It's there, yeah. It's there.
Am I blind? Oh, there we go. There's the Evo over there, guys. You want to open up. Trust me. Start learning how to use decentralized exchange. When it gets taken from you and you can't trade your leverage and stuff anymore, you're gonna want to know. So go here to Evo and get through there as well. Let's have a look. What's the markets doing? So I don't know if you want to have any say here, but markets. I think if we hold here, I think we're gonna go up, and I think if we go up, I think the dominance, you can see the weakness here. So all of a sudden, I'm pretty sure you can see Link looking near to break the highs, and you're starting to see the strength. Dots, I don't know what's up with Dots. Dots looking, it's worth it. Thank you, Michelle. Appreciate it very much. Let's see Phantom. See a nice little bounce from the alts at the moment. Definitely nice little bounce from the alts. So I'm kind of feeling that you're getting a couple of last entry positions here. What's your thoughts here, Dole?
Yeah, look, I mean, I see Arweave now taking off that 382.
Yeah,
so
Lobster,
yeah.
I agree. Lobster.
This was your bounce
Lobster.
here, guys. So look, at least what you're getting now is where these alts have bounced right now. What you're getting is exit zones. Okay, you've got clearly defined exit zones now with minimal risk now where they've just bounced. Okay, then if we start losing these areas, you start attacking the next zone. But right now, we've seen a good reaction here. If BTC loses that 618 in front of you there, what is that? 68,600.
500. Yeah.
Start closing under there, then I think the alts are going to
have some cash to buy some dubs. Yeah.
The alts are going to be sore. So it's pretty clear. It's pretty clean right now. Easy invalidation. You know where to cut, and you know where to stay long.
Yeah. So here's the two plays here, just to finish off nice and strong. So again, if there is a little bit of bearishness, basically what I'd be looking at is, let's do a couple of drawings here, is we'll basically set in a lower higher and we'll start to trickle down. And again, I do think we will hold these levels of 68. I think the bounce this morning was very positive, to be honest. I think it gave us some high time frame moves. And any massive green, even a green daily close, I think is bullish. I think it's going to repeat another green candle then tomorrow. So that's the bearish sort of vibe over there for now. Again, we'll be live again with some shows tomorrow. Bullish vibe, though, is in the next 2-3 hours. We creep up to this level of 70. When we pop 70, guys, I think we'll be at that 72 very quickly. And from that, guys, I don't think this wall is going to last that much longer. I think the more times we hit 72, 73, and we'll speak about a quick target. So the targets that I'm looking for, I'll show you guys here on my weekly chart of what I'm looking at the bullish scenario. Okay, here's the bullish scenario. Let's get it in play. Here's the bull scenario. My bull and bear scenario on the high time frames. That's what I'm looking at. This is such an important wall here. You got the weekly stock sitting at the bottom, showing that there is power, there is a oomph in the market to get us where we need to go. But once we get through there, I'm looking at 84. That's my first term. Then I do think they're going to come back with a little trick, just something to play around there, and ultimately the push to 100. So that's why this area is important. And you got to look at it in two ways. If you got some money to buy crypto now, I'm looking at the 50-50 rule. I would be buying 50% here, to be honest, because if the market goes bull now, you're going to be left behind. And what are you going to be buying bags a lot later on? And then the sense of if there's more opportunities, there's another 50% of your cash to go get your entries a little bit better and buy some a little bit cheaper. But nonetheless, I kind of feel you got to have 1 foot in, 1 foot out. That's kind of the level that you got to be, because if you are both feet out and this market takes off, guys, you're going to become late buyers again. And that means that you'll be maybe make some money in the short interim, but in the future, when there's any dip offs, you're going to go back into the red, and that sucks. Okay, you want to get to a point where when the market has exploded, okay, that there is any pullbacks or liquidation wicks in the future, and you're sitting pretty because you are sitting way down in the lower ranges. And it comes down to fishing at these major areas that we're at the moment. And I want to bring this again too. We could be at the phase of an all-time high break going into optimism phase. You know, if we look at the market of where we're at now and just a little bit of the emotions of where we're at, I kind of think we are hoping right now. Are you hoping, though? Are you hoping that we break all time? Are you hoping that it's alt season next? Are you hoping that ETF's going to go through? I'm hoping. Okay. So what that basically means is in hope phase, you could sit and hope, right? Like it's, you know, we could sit here for a little while. However, what's the next phase after optimism is that after hope is optimism. Now we start believing this crap. Oh shit, Bitcoin is in all-time high. Oh shit, everything is rocketing. And remember, those who make money in this market are those who buy disbelief, depression, hope, these phases. Those who lose money in this market. And if you look here perfectly, anyone that bought hope, the last bull cycle, actually ended up break even in the full pullback of the bear. Anyone that bought optimism was in a loss. Anyone that bought belief was in a loss. Everyone that bought thrill was in a lot of a loss. And anyone that bought euphoria basically went 90% down of their bags. So where are you buying? Where are you in the markets? And you can now rate where that is. I feel we are in hope. I feel that there's still some possibility. There's still some entries for you guys that you'll actually survive the next bear, as well as still being in the early phase of the market. Anyone that buys these higher emotions over here, they are the froth of the market. They are the 𝗔𝗠𝗏 of the market. And I'm really sorry to say that, but those are the ones you actually sell into. That's just the truth of it. You sell into those emotions and you buy these emotions over here. Is there any last things your side, Dill?
Don't overtrade. Don't get wrecked. Don't FOMO. Watch our show. Join Sniper Club. Do the journey with us. Don't do it alone. Okay? Watch the shows daily.
Oh, last thing. That's last thing. Last thing. Hold on. Last thing.
What are we doing?
I want to get Rand's opinion. I want to get his opinion. If he answers, maybe is it? I suppose he is. Maybe is. Do you think he's napping?
Must be 12 o'clock at night there.
Let's see if he doesn't answer. Then
it's 11:30 where I am now.
Okay, Random Man's not answering. Guys, have a fantastic night. We'll see you guys tomorrow. Much love. And if we survive tomorrow, bull, let's go. But either way, we're here. We'll survive the dumps. We'll survive the pumps. Right now, we're still looking good. And we'll see you guys tomorrow. Much love.
Later.